RBI surprised the market by announcing a sudden increase in its key policy rate. The Federal Reserve announced its policy rate increase in the next 24 hours, which was expected. The Bank of England has warned about double digit inflation. Hi and welcome back. I am Moumita, and in today's episode, we will talk about all the important events from last week. In Brazil, the central bank has increased the policy rates by 100 basis points. Now the policy rate is 12.75%. The Brazilian central bank was one of the first central banks to change stance from an easy monetary policy to a restrictive one. But even after 10 policy rate increases, the economy is still struggling with high inflation. However, the growth has started coming back slowly, and this might mean that the bank may put its brakes on the aggressive rate hike cycle. The Reserve Bank of Australia has joined the other central banks in increasing its policy rates. The last week, the bank announced an increase of its key policy rate from 0.1% to 0.35%. The central bank also spoke about withdrawing the monetary policy support which it had initiated during the pandemic. This move comes to curtail inflation. Inflation currently is around 5% in Australia, but the Reserve Bank of Australia wants to anchor inflation at around 2 to 3% levels. Moving to Europe, the European Union announced a new round of sanctions last week. The EU countries has announced an embargo on crude oil imports from Russia after 6 months and also a ban on the petroleum products like gasoline after 9 months. In UK, the Bank of England increased its policy rate by 25 basis points. Now the policy rate is 1%. Some of the members felt that the rates should be increased even more quickly. The bank, in its commentary following the monetary policy meeting, has warned about possibility of inflation rising above 10% and also the economy moving into recession. In US, the Federal Reserve held its monetary policy meeting last week. The Federal Reserve increased the policy rates by 50 basis points as expected. So now the policy rate is 0.75%. In the meeting, the Fed also spoke about its plans of reducing the balance sheet. The Fed will reduce the balance sheet program starting from June, and from September, it will double the pace of its monthly reduction. Currently, the balance sheet is a huge $9 trillion. A large balance sheet means that there is a large amount of liquidity in the market. And since the Fed wants to bring down inflation, it is necessary that the Fed reduces the liquidity or shrinks the balance sheet. The Fed had started the program in 2008 of increasing its balance sheet and has done it over many years and many QE programs. And now the unwinding will take years. Reducing the balance sheet will make loans costly and can hurt growth. It is likely to keep the markets nervous. In India, the RBI announced an increase in its key policy rate last week. This was a surprise for the market since it was announced in an unscheduled press briefing. The RBI also changed its cash reserve ratio and increased it by 50 basis points. The cash reserve ratio has been changed after 9 years. The sudden increase in both the rates will help in reducing the liquidity and finally bring down inflation. This was necessary since as the other major central banks continue to increase its policy rate, the RBI, if it has low rates, it will not be able to attract the flows. The RBI may be entering a competitive tightening mode. All this implies more increase in the policy rates likely in the next few months. This event led to a fall in the markets and rise in the long-term bond yields. That is all for now. Thank you for listening.